Hello everyone, this is the pre-market report video for 9th February 2023 in terms of Nifty and Bank Nifty. Just a reminder, today is Thursday and it is weekly expiry. Anyway, let's have a look at what happened on yesterday. First of all, in the morning, as expected, RBI increased the interest rate by 25 basis points to 6.5% and there was no surprise there. This expected rate hike along with a positive global momentum made the Nifty really very bullish. Nifty opened a gap up of just 30 points, but within 45 minutes, it added another 100 points on top of it. There was a small dip in the middle, but the positive European market supported the Indian market and closed above 17,850. Yesterday, the momentum was mainly capped because of the banks. ICICI, SBI and IndusInd Bank supports the market. However, maybe because of the rate hike, Axis Bank, Kotak Bank and HDFC Bank equally drags the market down. To be honest, I don't know the exact reason why some banks were really positive and some were really negative yesterday. If anybody knows, please let me know in the comment section. But I'm guessing the ability of ICICI Bank and SBI to generate funds through CASA and deposit is higher compared to Axis Bank and Kotak Bank. Since CASA and the deposits were the cheap money, thus it won't affect much of the net interest margin on SBI and ICICI, whereas it can affect the other private banks. In case of SBI's housing loan or the industrial loan, to some extent they can transfer this high interest rate to the borrower, whereas for the credit cards, the banks can't able to pass it. Again, all this I'm guessing, the real reason I'm not sure. Anyway, sector-wise, yesterday, metals increased over 4%, IT was up around 2% and pharma increased over 1%. On the negative side, only BSE capital goods ended negative of 0.33%. Regarding institutional activities, even yesterday, FII net sold shares worth approximately 740 crore rupees and DII net bought shares worth approximately 940 crore rupees. Then, after the Indian market, all three major index in US market opened very marginally negative, but the two FOMC Fed people's interview reversed the sentiment and the weakness in Google made sure to push the index further down. Last night, first New York Federal Reserve President John Williams in the interview said that he thinks that the peak rate will be 5 to 5.25%, which is 0.25 to 0.5% higher than what market is currently expecting. Then the Federal Reserve Governor Christopher Waller also warned that the interest rate will stay higher for longer than what market is currently expecting. So in one single day, last night, two FOMC members in the separate respective interview spoke very hawkish. Additionally, last night in the live event in Paris, Google executive showcased the Google's new AI chatbot. In that, they asked some questions related to James Webb Telescope. So there, chatbot gave the two correct answer but delivered the inaccurate third answer. This inaccurate answer last night cost Google over 10 lakh crore rupees loss in the share price. It made the Google share price to drop near 8% and affected most of the tech stocks negatively. Only Tesla and Netflix closed positive. Tesla was positive since for the first time, Model 3 and Model Y comes as largest selling vehicle in California, replacing the Toyota RAV4. Just for info, California is the largest economy in US and its GDP is greater than the whole India. All the automobile manufacturers always targets the California norms as their benchmark. It's kind of a golden standard. That's the reason coming as largest selling vehicle in California carries a lot of weight. Anyway, in the end, Dow Jones dropped by 0.61%, S&P 500 down by 1.1% and Nasdaq crashed by 1.68%. In terms of VIX, it increased by over 5% to 19.6. However, both dollar index and 10-year treasury bond yield stayed at the almost same place. The dollar index value was around 103.3 and 10-year treasury bond yield was around 3.62%. This interest rate fear also increased the oil price by over 1.5%. In terms of numbers, at the time of this video, WTI crude oil is trading near $78.5 US per barrel and Brent crude oil is trading around $85 US per barrel. Regarding Indian ADR, despite being negative in Indian market, last night HDFC Bank ADR closed to 1% positive and all others such as ICICI Bank, Infosys and Wipro increased around 0.6 to 0.8%. About SX Nifty, at 3 am Indian Standard Time, it closed at 17,890 level. It's kind of indicating flat to negative 10 points down opening. So that's what happened on the global market. Now let's move on to Indian market related info. First, let's see monetary policy meeting in details. Please have a look at this graph. Here the black line is the RBI's interest rate and the dotted blue line is the India's inflation. As you see in the pre-pandemic duration, the real interest rate was in the range of 2 to 4%. For those who don't know, as I said yesterday, the real interest rate is nothing but the difference between the interest rate and the inflation. Now again coming back to the graph, after the pandemic, the real interest rate was always negative. However, for the first time in the January month, it started to enter into the positive territory, but still it's less than 1%. So that's what the RBI governor highlighted yesterday. He wants the real interest rate back to its pre-pandemic state, which means in the range of 2 to 4%. So he said there will be more future possible rate hike. Here, please listen. Yesterday, Indian market closed positive by simply ignoring the RBI governor's comment that he will be open to further rate hike. Based on my experience, unlike US market, lot of times Indian market comes to its senses very late. So I won't be surprised if market reacts today to the yesterday's RBI governor's comment. Anyway, in the monetary policy meeting, out of 6 members, 4 members in favor of rate hike and 2 members were against the rate hike. Then the second information I like to highlight is regarding Adani's quarterly results. Adani Wilmar's net profit increased over 16% and the revenue increased around 4%. Regarding the analyst estimation, I can't able to find any. So in general, the result is mixed since profit increase was significant. However, the revenue growth is not that great. Then coming to Adani Port, here the net profit decreased by 16% whereas the revenue increased by 17%. Additionally, the French company Total Energy, it's put off its hydrogen partnership on hold with Adani Green. I consider this as negative. Anyway, let's see. As a summary, US market closed significantly negative, so the global momentum is not good. However, SX Nifty shows flat opening and all areas in US market closed significantly positive. Then about the stock open interest analysis, there is a short build-up on Hero MotoCorp, Bharti Airtel, Tata Consumer Product and Axis Bank. Regarding the items to look out for today, there is a schedule due to release the Q3 results for Hindalco, Hindustan Petroleum, LIC, Zomato and Adani Total Gas. In terms of macro in the aftermarket hours, it's just US weekly jobs claims data. Now coming to technical, on the daily chart, Nifty forms a long bullish candle. It forms a higher high, higher low formation indicating the return of positive momentum. If you look at the last 3-4 days move, technically this signals a positive counterback after a sustainable period of weakness. So today, sustaining above 17,850 levels is the crucial one, which can trigger the heavy call option unwinding at 17,800 and also this will provide more support to the index. Whereas in case of Bank Nifty, it forms a doji candle which still indicates the indecisiveness. Then coming to moving averages and technical indicators, for Nifty at present on daily chart, it reclaimed and moved above 5, 10 and 100-day moving averages compared to that of the Tuesday closing. So as a moving average summary, it upgrades from sell signal to buy signal. Even in case of technical indicator summary, in one single day, it improves from strong sell to buy signal. RSI value climbed to 46 level from around 42 level. Then for Bank Nifty, it's very similar to Nifty. It reclaimed and moved above 5, 10 and 100-day moving averages. So as a moving average summary, it's a buy signal. Then in terms of technical indicator summary, it improved from sell to buy. However, RSI value is unchanged at 46 level. Then from option change in open interest, there was a huge call options unwinded between 17,700 and 17,800 and huge number of significant new put option open interests were added at below 17,900. 17,800 got the new maximum nearby put options added and followed by 17,650. So 17,800 is crucial. If it breaks, then 17,650 is the support we need to look out for. Then regarding overall options open interest, 18,000 got the maximum nearby call option open interest. So 18,000 is the strong resistance. Then coming to Bank Nifty, based on change in open interest, significant huge new number of put options added at below 41,500. The maximum new put options added without the call option is at 41,000. So 41,000 becomes the immediate support. And based on overall options open interest data, significant short straddle were present at 41,500. Then the maximum call option open interest is at 42,000. Thus 42,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the algorithm and will also motivate me to do more. Please don't make an investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.